All right, so I know we haven't had Thanksgiving yet, but the country beginning to start focusing on the Christmas season, which officially kicks off with the new movie many expect to be an instant classic, Spirited. It's a musical version of Charles Dickens' story of the miserly misanthrope who was taken on a musical journey. So with that in mind, can investors still expect a Santa Claus rally? So here's the deal, folks. The movie will star Will Ferrell and Ryan Reynolds. So I want to bring to you their Wall Street doppelgangers. With me now, Kingsview Wealth Management CIO. I tried to say it with a straight face, Scott Martin.
How can I follow that, Charles?
And Mahoney Asset Management President Kim Mahoney. You guys would have to think of which doppelganger matches the stars. Let me start with you.
It depends which one we are. Yeah, you can pick out that later,
Exactly.
I guess.
Scott, let me start with you. I got to start with buybacks. Maybe buybacks to the rescue, because there's going to be billions of dollars pumped into this market every single day. These companies trying to get ahead of next year where that big tax comes in on buybacks. Will that help? Could that spark some sort of a Santa Claus rally?
It could start it, Charles. Now, if you look at the buyback history so far this year, a lot of it is just concentrated to a select few companies, some of the big cap tech names that we all know well, the Amazons, Facebooks, and Googles. But it does start to kind of hasten that buying opportunity that you typically see towards the end of the year, because investors get confident if the company executives get confident. But the point you made is really well said. This is to get ahead, most likely, at least this rush we're going to see towards year end, ahead of the excise tax that's coming down as a result of the Inflation Reduction Act. So companies are probably doing a little bit more than they would normally be doing in this scenario, but it still shows there's some confidence in their business going forward. And so it's probably a good reason to actually chase some of those stocks here for a bit.
What do you think, Ken?
So I think the catalyst for year end will not be buybacks. And if we're amongst friends here, and I think we are, I could use the L word, landslide victory next Tuesday. I think the market's really going to like that. I mean, markets like gridlock. They don't like this brainless spending we've seen. They don't like big tax hikes. They don't like all this regulation. You know, there's going to be a big power vacuum here too, right? Nancy Pelosi no longer be Speaker of the House. Janet Yellen probably be sent out to pasture. I think when investors kind of look at a new formation come January and kind of, the checks and balances of Washington, I think that's where the market's going to find the catalyst. To tell you the truth.
Yeah, well, you jumped to my follow question number 4, but I was definitely going to bring that up. Here's another thing. Obviously, a lot of people think that Jay Powell, is center here. We get the CPI report. I guess that's the next big number out there. If one of these numbers, Scott, if one of these numbers comes in less than expected, if this consensus game, by the way, is ridiculous, right? You can say, oh, it's going to be up 2 pennies and it's up 3 pennies and it's great. The superlatives are just nuts when I hear financial commentators. Anyway, I don't want to digress. Jay Powell, if he can at any point signal, okay, I'll make a reassessment, like we heard from the Fed Boston president today, how much would that send this market up?
That would be great. If we can count on it after this week's performance, I don't know, man.
Yeah.
I tell you, Jay Powell needs to really be hit over the head with a lot of these numbers, and I don't think one number is going to do it. I think that's the sad thing that we've kind of learned. So you're right. It definitely gets the market maybe off to the right start of believing a couple more pieces like that. There's 2 CPI numbers, by the way, that are in front of the next Fed meeting. So maybe 2 numbers like that, Charles, will work. But I think Powell is really serious about this job-owning brigade that he's on. And so I think you're going to have to wait a couple months until we hear Powell at least come back to maybe more of that, okay, now we're going to wait and see and let the economy breathe.
All right, let's talk about the mega cap names, because they're front and center all year long. Right now, Apple, believe it or not, has a higher market cap than Meta, Amazon, and Google combined. But here's the thing. In the past week, retail investors, they sold $130 million of Meta. They sold $122 million of Amazon. They sold $112 million worth of Apple and bought $137 million of Google. So, Ken, I mean, of these names, are any of them attractive to you?
So my favorite long is Apple. And by the way, you look at last week, we had the kind of Survivor, the TV show, someone will go home. I mean, one day it was Meta going home, the other day it was Amazon going home. It was Google, it was Microsoft. The almost standing was Apple. Though I have to say, it's been trading pretty poorly the last week or so. Again, we like Meta short into rallies. We definitely like Apple longer term. But by the way, there's going to be little sea change. Again, you talked about buybacks. On the other side, though, there's going to be tax loss harvesting, which may offset some of that buying. So, again, if you go in with Apple long, again, we're talking about tiptoeing in, not 2 hands at this point.
Scott, what are you doing here as we head into the weekend?
Yeah, not chasing tech here just yet, Charles, but looking at stuff in the energy space, really, just maybe in the end of the year, maybe in the end of the month. And we've talked about these before. Pioneer, PXD, and AMLP, man, has been just an awesome hold, just kind of the toll booth of the energy sector, pushing energy and gas through the pipeline. So AMLP and PXD, I think, are great places to play energy away from some of the integrated and some of the big names that you hear about all the time, and have higher dividends, by the way, than some of those names, and just about the same PE valuations in the single digits.
All right, guys. Thanks so much. Scott and Ken, or should I say Will and Ryan? We'll figure out who's who. All right, have a great weekend, guys. Up next, my takeaway on the